I've been looking at how that's affected our firm internally and whether we have any exposure to this. And really, it's sort of more of a wealth management tax planning phenomenon. It is about having the right structures for tax efficiency and in some cases tax avoidance and things like that, which is really not what private equity is about. Private equity is about structuring vehicles, commingled vehicles, to invest into projects or companies or real estate. They're two different things. One is individual tax planning, and the other one is creating vehicles that will actually grow and be profitable and successful. So I don't think they're connected in any way, and we haven't seen any difference to our business on the private equity side. I think it's made a big change and more opportunity in the debt space. You're seeing peer-to-peer lending vehicles really growing and filling that gap, not just in the US, but also globally. We operate a peer-to-peer lending vehicle out of our Dubai office, for example, which is very successful. So that level of lend that the banks aren't really covering so well now is an opportunity for the peer-to-peer lending funds, and even crowdfunding and other vehicles are getting involved in that space. It's changed the dynamics significantly, but it's creating good opportunities for people, creating fund structures around that. And it's not just a US phenomenon, it's even happening in our office in Australia. We're talking to several opportunities like that. And there will be a standardization, I think, across the industry. It's coming slowly. It's been standardized in terms of the reporting requirements on the open-ended and the hedge fund and the fund of funds side for many years. But that hasn't happened yet on the private equity space. So the investors are driving that, and the due diligence requests from the investors and the investors' consultants are driving that, and there will be a standardization across the expectations of the reporting and how reports are delivered and the requirements of ILPA, for example, and the standard formatting of reporting. And that's really important to standardize it across the industry, because then investors can know exactly what they're getting and what they're looking at, and making sure that each GP is apples for apples in terms of when they're compared to each other, whereas historically that may not be the case.